Hey, it's Michael Saul, but everybody calls me Tiny. This video is the Big Five lose $75 billion, but does it really matter? This is stock market analysis for the week of November 12th, 2018. If you would like to receive intra-week updates, www.attackthemarkets.com. Put in your first name, your best email address, follow the directions, and you will be on the distribution list. Facebook group is at facebook.com/group/attackthemarkets. If you like what you're hearing in this video, give me a thumbs up and leave a comment so I move up the ranks in YouTube. And if you never want to miss a video when one is updated, hit subscribe and smash the bell so you will be notified. So, before we get into the market, I am recording this on November 11th, 2018, which is Veterans Day. It is a Sunday, right? And I'm not a big Veterans Day fan. Now, I have nothing but incredible admiration for veterans, okay? I never had the balls to join the armed services. It's one of my biggest regrets. My father served in the Army Air Force in World War II. My uncle served in the Army. My grandfather stole his brother's birth certificate in order to sign up for the Navy for World War I. He was 15 years old. It's a funny story about that. They told him he didn't weigh enough, so he went home and ate bananas for a week, came back, and they let him in. It's funny because I think that if I ate bananas for an entire week, I think it would do the opposite. I think it would clean me out, not bulk me up. But anyway, the reason that I'm against Veterans Day, and the same reason I'm against Memorial Day, is I don't like these days being used as an excuse to run sales. And I'm all for marketing. I'm all for advertising. I get it. But if you want to do it on Labor Day or President's Day or Martin Luther King Day, Mother's Day, fine. But Veterans Day and Memorial Day also, I mean, they should be every single day. Every single day. We should honor those that served and, covered our asses and protected us and protected our rights and freedoms, and especially those that gave the ultimate sacrifice. So what really ticks me off is if Veterans Day falls on a weekday, the stock market isn't even closed. I just don't understand this. I just don't understand it. But anyway, that's enough of my rant. I am absolutely pro-veterans. You ladies and gentlemen are the true heroes of the world, those that serve in the armed forces, like I said, protect the rights and freedoms of my family and I. Okay, so I don't think it should be one day. I think it should be all the time. Okay, let's take a look at the market. So we are on the bounce. After hitting the measured move that I laid out a few weeks ago, we started a bounce. The end of the week, which was Friday, we did pull back, but notice that we did close above the 200-day moving average. Now, I am not calling anything strong here while we are below the 50. While we are between the 50 and the 200. We could play ping pong here and go back and forth. I still believe we are going back down. That's what I said last week. I said last week that I didn't think the decline was over. I don't think we're going into a bear market. I don't think we're going into a big correction. My opinion is that we continue to move a bit lower and either get to this low, take out this low, or maybe get a retracement to the low, maybe wind up here, maybe fill the gap or something like that. Now, here's where I am wrong. If we coil up here and power through the 50-day moving average, I think we go to new highs before the end of the year. Now, we still have over 6 weeks left in the market. I don't know what it is exactly. I really don't care. It's about 6 weeks, 7 weeks, whatever it is. But if we coil up here and build up some energy and then bust through, I think we're going to go right up to new highs. Okay, now, what happens when we get to when we get to those new highs? One step at a time. But for right now, for this week, here's the levels that I am watching here. At least on the S&P, and we'll go through the other indices as well. All right, I'm having a hard time drawing a straight line here, so that's okay. But last week's highs are important, but more important to me is the 50-day moving average, and I don't want to see us go right up from here. I want to see us form a coil like we did back here and then bust through. That's what I said. Could this be a mini head and shoulders pattern? Yeah, it could be. A mini inverted head and shoulders pattern, sorry. Yeah, it could be. All right, and if that were the case, then this measured move would absolutely bring us to new highs, right? But I think we have a little bit more work to do here. So I want to see what we set up like over the next few sessions. That's the S&P 500. Here's the Dow. Dow acting better, showing better relative strength. But again, I would like to see a coil. It's above the 200 and the 50-day moving average. I don't really put much weight into the Dow comparatively. The Russell is underperforming. So you see the Russell's recent high is not higher or matched with the previous high. But again, I want to see a coil sitting up here. And like I said, when I was talking about the S&P 500, I still think we have a shot to go lower here first, okay, and get at least a retracement back to this low. If it doesn't hit the low, maybe a partial retracement, etc., right? But the fact that the Russell had multiple days below that 78.6% retracement tells me the next time it breaks down, we're going to go to that February low in the Russell. Doesn't mean the S&P has to follow. Mid-cap's holding up a little bit better. Mid-cap's already got the full retracement to the February low. And then here's the NASDAQ, which, again, I mean, isn't acting as well as the Dow. Big deal. It isn't acting even as well as the S&P 500, but is doing okay. It's sitting on the 200-day moving average, actually closed below it, but you could see Friday traded on it. Let's see if it coils up here as well and what it's going to do over the next few sessions. All right, semiconductors. So semiconductors got a nice bounce, and they're back in this, what I call the sloppy topping pattern type of range. All right, so at first it broke down. I said, okay, here we go. We're going to come down. We didn't quite make this breakout point, which I still think could be a target if we continue to trade lower. But now we're back inside the range, so we have to wait for the best move. Getting complaints that I'm not going over the individual stocks, so let me go through a couple. I aim to please. Right, KLA Tanker, watch the 50-day moving average. If we get there as resistance, we get a reversal candle there, it may offer a short side position. Here's NVIDIA, which was one of the stronger stocks for a while, is now showing relative weakness, but still okay. I mean, it's definitely in a short-term downtrend, but I want to see what happens here. Let's look at Intel. Watch the 200-day moving average, see if it could break out above that. Here's ADI, right at the 50-day moving average and a turn. What about the banks? So the banks are interesting because the banks formed this coil. I thought they were going to break down. I did say wait for the entry. Instead, it broke to the upside, but we have the 50-day moving average coming up, so we want to watch that. Bank of America, watch the 50-day. JP Morgan at the 50 and the 200-day moving average. Here's Citigroup. So Citigroup is acting relatively weak in the group. All right, so it's showing relative weakness. If we do roll over, Citigroup is one to watch for the downside, and JP Morgan right up here. When we compare the two, you could see that JP Morgan is at the 50 and the 200, which are now actually converging here, while you see like Citigroup didn't even get close and already turned. So we want to watch that. Here's the broker-dealer index. So broker-dealer, I mean, showing a little bit better relative strength than the banks, but between the 50 and the 200 day, so I'm not really excited. Here's Goldman with a nasty day on Friday, down nearly 4%, $9. See if that's the start of a retest down to the lows. How about biotechs? So biotechs came to the 200-day moving average, tried to get over, boom, 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 could not. Push down. Let's see if this goes back to the lows. Here's a Biogen, and here's like an AMZN. I mean, they're sloppy more than anything. I don't really have a firm. You see between the 50 and the 200 day, it looks like, oh, well, we're getting a bounce, and this looks like a bear flag. Well, it's not really a bear flag, right? Because it's overall in the big range of things, and it's also between the 50 and the 200 day moving average. So, what about the title of this video, which was the Big Five lost $75 billion on Friday? So here's what happened. Friday, I get an alert on my iPhone with Apple News, and it's a CNBC headline, right? And here it is. Tech's Big Five lost a combined $75 billion in market value on Friday. Facebook, Amazon, Apple, Microsoft, and Alphabet collectively lost $75 billion. Tech stocks are coming off their worst month since the recession, blah, 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 blah. All right, so I read CNBC. I'm not saying that it's all garbage. This isn't a garbage headline, but it definitely is, a headline grabber, right? Oh, $75 billion. But in the end, I mean, Facebook has been hurting since a couple of months ago. Well, let's go over these and let's take a look, right? So Facebook has been hurting since it popped up in July. So yeah, it lost $75 billion, lost nearly 2%, but I mean, it's all relative. Amazon has been hurting since it put in the lower high, but it didn't, it lost $42, but in the end it lost just under 2.5%, still above the 200-day moving average. What else? Apple. Yeah, Apple's been weak since it came out of its bull flag and hit the high. Okay, you got Alphabet. which has been weak as well. And then what was the last one? Or did I get them all? Hold on one second. No, of course, Mr. Softy. How could I forget? Because Mr. Softy actually took over as the second, I believe, the second highest ranked company, and then anyway, so it showed some weakness too, but got a nice bounce off the 200-day. So, is the $75 billion loss, does it really matter overall to the market? My answer is no. Okay? All the stocks I showed, maybe with the exception of Alphabet here, which is under the 200 and the 50, and Facebook, which has been weak since it hit the high. Remember, our good friend Paul Schatz says that this high is going to be the high for many years to come, right? But if we look at Apple, right, still above the 200-day moving average, Amazon between the 50 and the 200, Microsoft. I mean, I just think it's a sensational headline. Yeah, okay, so the market got cracked on Friday a little bit, and these five got hit hard. Okay, but it's, in my opinion, it's not foretelling of anything. This pattern on Microsoft doesn't really look nasty. Yeah, Facebook and Alphabet don't look so great, granted. But the other three, I mean, they don't look terrible. I mean, to me, Microsoft doesn't look like a short here. Yes, could it be shorted? Of course, down to the 200-day moving average if we get confirmation on Friday's low getting taken out, right? Maybe, okay. But again, I mean, you're still playing with fire. It's still a pretty strong-looking chart here, despite the recent volatility. Right, we had a zigzag pattern down to the 200-day. It got the bounce. And you know what? When you hit support, doesn't mean we're going right back up to new highs. So this may be a pause like the rest of the market. It may coil up, and then it may advance up to the new highs. So just something to keep in mind. Here's bonds, and we talked about bonds last week being in a buy divergence. So last week didn't really do much, just kind of went sideways, and then Friday, watch the 20 EMA. Now, after this buy divergence, and I don't have the momentum indicator on here, but if I did, you would have seen what I drew in. What you really want to watch with divergences, both buy and sell divergences, here's the secret, is, okay, maybe it's a buy signal, but what happens if that buy signal doesn't work? Oftentimes when divergences fail, you get acceleration in the previous direction. So we could get acceleration here to the downside. Remember, if rates rise, it will likely continue to put pressure on the market. Here's oil, just got hit last week, continuing to get hit here. So that's good for our gas prices. If we take out these lows at 12.33, that would be a pendulum move. Now, it's a little late in the day, a little late in the year, because this did happen in March, but you could see it broke out here and went higher. So now, if it swipes through, it could see an equal move lower, which would be about 3.5 points down to $9. Not out of the question. All right, if you've been paying attention to the last couple of months of these videos, I've said that I think we could hit the 2017 lows. All right, so just watch oil here. It may not be a short right now, but if it flags, could be opportunity. And here's gold. Yeah, just gold. I still don't see a bottom here. I'm not saying that, oh, I told you so, because no, we're not at new lows here. But this could just be a rest, right? We could just be pausing here. But I really don't see a low in gold quite yet. All right, so recap. Nice bounce here on the S&P 500. Some indices are performing worse. The Dow is performing better, whatever it is. I think the next few days are going to be critical. Okay, I think we're going to form some sort of pattern here, and then I want to watch to see which way we release either the upside or the downside from that pattern, and then I think from there we'll have a better feel for which way we're going on the short term. If we coil up here, build up energy, and break through the 50-day, then I think we're going to new highs. If you know a veteran, give him a kiss and a big thank you from me and my family. If you are a veteran, hopefully somebody gives you a kiss. But please accept my thanks for your service. And, I mean, have a great rest of your life, not just a great Veterans Day. Okay, but yeah, go take advantage of the retail places that give the free meals and the free products and the discounts. Go ahead. I mean, I have respect for them. I have more respect for those that give them all year round, but that's okay. I just, you deserve it, and I thank you for your service. Have by the way, happy birthday to the Marine Corps. That was on Saturday the 10th. Happy 242 to you as well. Of course, you're part of the Veterans Day, too, but also it's special because of the Marine Corps birthday. Anyway, have a great trading week. If you have any questions, tiny@attackthemarkets.com. And don't forget to sign up for the intra-week update list. All right, that's it. I'll talk to you in next week's video or during the week through the email updates.